As Steve Jobs said, don't let the noise of other people's opinions drown out your own inner voice. Hello and welcome to this week's Australian Share Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing blocking market noise, and then I'll touch on the All Ordinaries Index, the Australian dollar, and Australia's infant milk formula suppliers A2 Milk and Bellamy's Organic. Whether you're a trader or an investor, contrary to what many think, being successful is not about picking the next big winner. It's very much about having a winning process. Quite simply, it's not what happens that counts, it's what you do with it that does. If you've been watching the media the past week talking about the market, you might have also become a bit worried. As you probably heard, China has reacted to the Trump government raising tariffs on Chinese imports by adding tariffs of their own to various imports from the USA. Now, I'm not going to get into all this and explain why the falls occurred and what this means, as quite simply, that will not make you money. In real terms, the Dow Jones Index fell from a close of 24,682 points on Wednesday, the 21st of March, to close on Friday, the 23rd of March, at 23,533 points, with a fall of over 1,149 points, or just over 4.5%. But the questions are, should we be worried about this, and should we be buying or selling? During the week, I spoke to some novice investors and traders who were buying stocks simply because, in their words, they were cheap because of the heavy fall. What they could not tell me was if the market or the stocks had stopped falling. And herein lies the issue. Buying a stock because it has fallen in value is a poor decision for both investors and traders. Now, I asked these same people what they would do if the stock they purchased continued to fall this week, and how would they feel about it. Now, all did not know what they would do, but they all did know how they would feel, and that was not good. If these stocks fall further, these people will do with high probability what the uneducated always do, and that is to hold on to their stocks as they fall away. They will also justify their poor decisions by saying that they have bought a good stock and that they have not lost because they've not sold. Again, this is poor thinking and poor decision making. So should we be buying or selling right now? Well, to understand this, we need to understand that just because a market is falling and may fall further, it does not mean your stocks will fall and also need to be sold. It also does not mean you should be buying. All decisions about buying and selling need to be made solely by analysing and assessing the stock itself. Generally, good stocks will give you signals to sell prior to these volatile periods, and having some simple and solid rules around managing the stocks you own is the best thing that you can do to ensure that you are more profitable. The vast majority of investors have little or no strategy about what and why they are buying, and have even less strategies about when they will sell stocks. Now, in my new book, Accelerate Your Wealth, which is due to be released soon in Australia and in the US with a special US edition, I discuss really simple strategies and techniques that will help anyone eliminate not only the emotional buying and selling that happens during these times, but give them strategies to manage and trade more successfully. So what should you be doing right now? Well, quite simply, you should be watching the stocks you own for any signal that you should exit that position. Secondly, you should be researching possible stocks to buy when the market proves it's stopped falling. Successful trading is about being in the market when the time is right and out of it when it's not. It's also about being prepared not only with a watch list of stocks you might like to add to your portfolio when the times are good, but in having rules around exiting when the times are not. So what do we expect in the market? Following a pregnant pause on the Australian market in recent weeks, the All Ordinaries Index has finally traded lower in response to a sell-off on global markets and confirm its direction. The All Ordinaries Index is now pulled back towards an important support level below the 6,000 point mark and traded to a low of 5,916 points last Friday before closing slightly higher. As mentioned last week, major financial institutions were poised ahead of this week's announcement. the market learned that the US Federal Reserve is likely to raise interest rates only 3 times this year, instead of the 4 predicted by some analysts. Now, the market took the news in its stride. However, the building trade war between the US and China led to the sell-off on Thursday night, and the mood flowed onto the local market on Friday, causing it to fall. Now, right now, there's nothing to be worried about. As you may remember, we have said previously if the market was to fall, that it would be around this time and most likely over soon. So let's now get into the charts. Okay, on your screen right now, you're seeing a weekly chart of the All Ordinaries Index. I haven't changed it since my last report, and you can see here last week's bar here opened at a high of 6,055.8 points. It did have a low of 5,916.9, as I mentioned just briefly before. So the range for the week was 169.2 points for the week, and it closed near its low at 5,929. That was a really important level. There's a couple of things we need to look at here. Is one, the previous week's high that you can see where my pointer is now from the week of the 16th of March was lower than the previous high here on the 2nd of March, and our most recent isolated high was in January. Just like the Dow Jones also has been falling away generally since January, but it's up until recently we really haven't been able to confirm whether the market was going up or down. It was a bit more of a consolidation movement. As we saw these last 4 or 5 weeks, the opens and closes of each week we're reasonably in a tight range. So the market hadn't decided which way it was going. And as we mentioned a few weeks ago in one of the reports, we're saying, you know, in mid to late March, we'll likely have a bit of a pullback. We'll know whether the market is rising up through to April or May, or whether it's going to be falling away until that time. And as we said, if it was going to fall away earlier, like it looks like it's doing now, then the second half of this year will be more bullish than bearish. But if it did continue to rise through that high of 6,256 points set on the week ending this 12th of January, then it would likely rise up till April and May and then come down later in the year. So this is actually good news. It's not bad news. Just look at your portfolios and making sure you are protecting your positions and your capital. But right now, our Australian market is looking good. I would expect it should go through the low of this bar on the 9th of February, which is 5887.3. I wouldn't expect it to go too much below that before finding support, but at this point in time, it's good to stay out of buying new stocks at this point in time until we confirm that the market has found support. So today I'm going to have a look at a couple of stocks that have been in the media a lot, A2 Milk and Bellamy's, because obviously they're in milk and baby products, etc., that is going over to China. So let's go to those charts. Now I'm going to bring up A2 Milk. And there's a couple of interesting things on A2 Milk. As you can see on the the left-hand side of the chart, you see that currently the Bellamy's, it's a monthly chart. It's currently closing at, or closed last Friday at $12.74. And you can see there that what I want to share with you here is it rose up from a low back in about May 2015 at 46 cents up to a high here at, let me get my pointer onto that, at $2.30 in February 2016. And what you can see there, it fell away over a period of months, 45.76%. But since that point in time, at that low, which was in June 2016, we can see how much it's risen in let's see how much it's risen in price here. Over here you can see this green line. I'm just measuring the distance between that month and March, or at this current month, and you can see here that that's 20 months in total without having any sort of significant pullback. That's one sign that I look at to say, well, hang on, how far can it go? Because we're looking at back here on August 2017, some 8 months ago, and it had a high $5.28. Now it's around that $13 mark. So people remember those sorts of things and saying it's going too fast, it's gone too high. I could have bought it cheaper a while back. The other thing that worries me, this huge big gap between August and October 2017, that huge gap. Stocks tend to then fill those gaps. They come back to fill them, or rise to fill them if they're on the opposite way. So there's a couple of things that worry me about this stock. I wouldn't be entering into this stock right now. It's too late. It's running very, very vertical, and as we know, what goes up fast comes down fast. And you can see the same thing. We had this big movement through here in February, where the stock had a range of $5.26 and yet it opened at $8.64. So that was obviously under that announcement when Fonterra in the New Zealand went into an agreement with A2 Milk, and obviously they're distributing into New Zealand, and they're working in collaboration. Now let's go and have a look at Bellamy's. A little bit of a different story for our market. So here Bellamy's, again, there's a monthly chart on the left and a weekly chart on the right, and what I'm showing you here is a little bit more volatile Bellamy's, although that said, it has spectacular gains since January 2017. So in the last 14 months, it's risen from a low of $3.65 to being up at $22.08. So that's a spectacular rise. What I want to bring your attention to is the first run here that went from 2014 or August 2014 to December 2015. And you can see here that it says 16 bars there. That's 16 months. You can see here the move from the low in January 2017 to that high, the current high that we've got here in March 2018. It's been traveling, if we look at that, it's been traveling 14 months. So it says to me that, and because it is going quite vertical the last 3 months, again, it's saying to me that this will slowly run out of steam at this point in time, because again, it's about good news. These guys have been going up, and both Bellamy's and A2 have been going up on some good announcements and good news, but how many they can have. But you also see Bellamy's fell from a high of 16.16 all the way down to $3.65, and that was on a bit of bad news about China and what was going on with their milk powders in China. So they can fall quite quickly if there's some bad news. China only needs to say, hey, we've banned Australian milk products, and both of those stocks, I'm pretty sure, would actually fall quite heavily. So is it the time to get into them? No. Is it the time to stay in them if you do own them? Absolutely. So do look at these stocks. They are great stocks, but right now I'd be waiting for them to pull back a bit before I'd start to get too excited about getting into them. So that brings us to the end of the charts for this week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.